Today I have the pleasure of interviewing Michael Eschmann, who is the Managing Director of Rex Shares. Michael, thank you so much for your time.
It's great to be here, Z. I appreciate you having me.
You know, there's so many things for me to talk about in terms of the options world, in terms of covered calls, and we can dive deep into the hood here in a second, but give us a quick brief overview of what is it that Rex Shares does.
So Rex Shares is an alternative ETP provider. We have been around since 2015, very well known for our active trading suites. Currently we have 3 different suites of products. 2 are really designed for the active trader. One of those is called Microsectors. That is a partnership between us and the Bank of Montreal. And there we provide leveraged exposure to sectors and various different themes. Typically 3x, negative 3x exposure.
Yeah.
Those products have been out for some time and are growing quite significantly. The second suite of products is called T-Rex. It's a partnership between Rex and Tuttle Capital. And what's notable there, Z, is we were the first company to figure out how to get the maximum amount of leverage on a single stock product. That's 200%. So those products are about a year old, offering leveraged exposure to names like Nvidia, Tesla, MSTR, Bitcoin. Like I said, about a year old and a billion and a half in assets. So traders have really flocked to those products and been excited to get the most amount of leverage available on a single stock product.
So I'm going to touch on like T-Rex and also Nvidia here in a second, but let's talk about the covered call ETFs.
Sure.
And how are traders able to kind of get exposure for, say, consistent profits and also stock exposure as well?
Right, yeah. So that's our third suite of product, which is designed for the income investor. Obviously, there's been a ton of asset flow into covered call strategies over the past 2 to 3 years. Certainly, we've taken notice of that and thought that it was sort of ripe for innovation, that the covered call space was ripe for innovation. So we launched FEPI about a year ago. It's sort of our flagship covered call strategy. And FEPI invests in 15 of the biggest tech stocks, equally weighted, and we write calls on each individual stock, roughly about 5% out of the money.
Yeah.
The thought there being, Z, that these are growth stocks. We want the investor to be able to participate in some of the upside while earning income on, names that typically don't pay distributions.
Yeah.
So it's been enormously successful so far. We're north of 400 million in assets with a 25% distribution yield. It's been distributing about 2% per month. So we're just seeing a lot of positive feedback, a lot of pleased investors who are looking at FEPI, but then some of the products that we're building on top of FEPI.
You know, so many of the conversations sometimes is between growth stocks, income stocks, but with your call options like ETF, how are you able to kind of substantiate and differentiate yourself from others in this space as well?
Yeah, I think one of the biggest differences between our products, between FEPI and some of the competitors out there, is that we're writing calls on the individual stocks. The individual stocks tend to have a much higher implied volatility than a more broad-based index, which is what you see on a lot of the products out there. So because we're using a concentrated basket of stocks, we're writing calls on those individual stocks and harnessing that volatility at the stock level. That's one of the biggest differentiators out there. Another big differentiator is the fact that we're writing calls roughly 5% out of the money. A lot of the other products that are out there are writing at the money calls.
Yeah.
So the fact that these are growth stocks, and again, we do want the investor to be able to participate in some of that growth, we're targeting about 5% out of the money. And that's really been a sweet spot between allowing that growth and then also capturing the income from the premiums that we're getting from selling the calls.
Yeah. Now, so many investors, traders are all about the Teslas and the Nvidias of the world. So let's talk about T-Rex, how you have your single stock-based ETFs as well. How are traders able to take advantage of those products specifically?
Yeah, those products have just been, like catnip to traders. They love it. They love the amount of leverage that we're able to provide on those names, and we see it used in a lot of different ways. A conversation I've been having frequently with advisors is around Nvidia. You know, they're sitting on massive gains in Nvidia over the past couple of years, and wondering, you know, how they can kind of manage their exposure without selling and incurring those taxable, you know, that taxable event. So we're seeing a lot of advisors using inverse Nvidia products, for example, just to kind of manage that position that they've been holding for some time. We see a lot of trading around earnings. You know, obviously earnings season's coming up. You know, a lot of big earnings reporting in the next few weeks. The single stock ETFs are great for either short-term trades, you know, high conviction outlook around earnings, hedging, you know, exposure, kind of the whole gamut, you know. So again, we're continuing to build that suite out. We just recently launched 2X MSTR, which has exploded.
I was going to say, quite volatile there already.
Quite volatile, and we've seen just a massive inflow of assets and volume into the product. It's 2.5 weeks old, 3 weeks old.
So with the 2X and the minus 2X, then how are traders able to maybe say manage their portfolio, manage their positions with that? With the 2X and the minus 2X, right? How are traders able to kind of manage their positions, their risk assets, and things like that with that product? Yeah,
so again, they're using it for hedging purposes, for you know, exploiting high conviction outlooks on you know, whatever the stock may be. You know, using it perhaps in sort of like core satellite type ways. You know, maintaining their core positions and then using the leverage products to kind of trade around the periphery, you know, and pick up alpha, you know, in that type of way.
Now, your EPI products has hit some great milestones as well. Talk to me a little bit about that.
Yeah, so AIPI is sort of our follow-up to FEPI. FEPI just recently had its 1 year anniversary. It just launched a year ago, and AIPI was launched in June of this year and is sort of the follow-up to FEPI. Much the same way FEPI is looking to generate income on high growth stocks, tech stocks. AIPI is doing that with AI related stocks. So we're looking at 25 of the biggest AI stocks out there, looking at pure play AI stocks, and then also companies who are AI enablers and are major users of AI. And then writing calls on those individual stocks, roughly 5% out of the money, to generate north of 30% in distribution yield. So it's been a nice follow-up to the success of FEPI, and is the second in what is hopefully a long line of income strategies, you know, under this sort of covered call methodology.
You have obviously a whole suite of products that I think has helped kind of the growth behind having $2 billion under assets. What else do you think has kind of driven this expanded growth in just say the past 2 years? Yeah,
it's been tremendous growth. So we're $2 billion in those the two new suites of products, the T-Rex and our covered call strategies. We're over $6 billion across the three suites, and you know, we've seen pretty substantial growth over the past couple of years in the trading suites. You know, with everything going on around the Fed, right? The Fed reducing rates, increasing rates, reducing rates, keeping higher for longer. You know, everything from the regional bank blowups, anything that is becomes a tradable situation is you know, we see massive spikes in our trading suites, and there's been no shortage of catalysts, you know, over the past couple of years. So you know, what I started with Rex 2.5 years ago, assets were at 1.2 billion in the microsector suite. Microsector is now 4 billion, and we're collectively 6 billion across those three different suites. So it's been exciting times at Rex, massive growth, and we're just going to continue the party and keep adding to those suites.
And like you said, like, you know, no matter what, there's always something happening in the world, and you know, it's an election year, so you've already seen volatility. You'll continue to see volatility as well. Some exciting times as well. Last question for me: what would you say, or who would you say is like the ideal user of these products? Is it someone on the retail side every day? Is it a swing trader? Is it institutional? What would be the ideal individual using your suite of products?
Yes, is the answer to that. So we're here at the Robinhood, first Hood Summit,
Yeah.
which is really geared for the active trader, and they're looking to expand their product to the active trader. The active trader, fits our bill perfectly. They are drawn to our leverage products from a trading standpoint, but then we also see significant interest in our income strategies from the retail class as well. So it's really a nice crossover between trading and income investing that we see, and it appeals to retail. It appeals to advisors. We have tons of conversations with RIAs and advisors, as well as institutions. Hedge funds. Hedge funds are using the trading products. It's just cheap, easy exposure, leverage exposure to themes and the biggest stocks in the world.
Yeah.
So we really see it run the gamut.
I think the biggest opportunity there is a call spreads ETF that we talked about at the beginning of this interview, just because to get into options trading, to get into call options, there's a lot of educational learning curve that you have to go through.
Absolutely.
But to have an ETF that kind of breaks it down, makes it easy, and does, I would say, the heavy lifting for you, and you're able to kind of see the progress, I think is quite impressive as well. Because like you said, it's like, hey, we are, 5% off, out of the money or whatever the case may be. For a beginner trader, that might be tough to understand and grasp.
Yep.
But they're able to take baby steps with your ETF, and I think that's fantastic to get involved in the options of call spreads.
Absolutely, they understand the distribution part of it for sure. And again, if you follow the assets, they're flowing into derivative-based products, derivative-based ETFs. So we saw that as an area that was really ripe for innovation, and so far so good.
Awesome. Thank you so much for your time, Michael. I really appreciate it.
Zia, it was a pleasure. Thanks for having me.
You got it. That is Michael Eschmann, who is the Managing Director of RexShares.